Traders, how are you? Vladimir here from Traders Academy Club. This is my weekly trading summary and review, trading the systems. I am talking about the SRS Pro, the Forex Triple B PRO, and the strategies that I teach in the Divergence University trading course. Today we are on 28th of March 2022. So basically we will be reviewing the previous week. To do so, we will go directly to the website. I will start with the Forex Triple B, then I'll go to the SRS, and then with the Divergence University. So for the first two, it was pretty solid, nice trading week, active. During trending markets and during the higher volatility, that's what you will get with the SRS, with the Triple B. The purpose of this video is every week I upload, it's educational, is to explain what sort of decisions we make and why. Okay, when we face the alerts, how the system works, you get an alert, and then by following the rules, you decide, is it a good trade to take or not, if all the rules are implemented. And in these videos, I want to give the extra tips, what sort of things we take into considerations, and mainly why. Okay, so when you work with the trading systems or these strategies, you know what to pay attention to. For all those of you who have any of these trading systems or the courses, so this video comes to help you to understand a little bit better what should be done and mainly what should not be done, because I will also be presenting things that the way we traded, but why did we decide to trade it and why it was tricky, so you know what exactly this trade failed, which I'm referring to. You will see that on the SRS, but my purpose here is so you know to do the same when you work with that. If you don't have any of the strategies, the systems, you want to get the access to that, so you can go directly to the website forextripleb.com or the srstrendrider.com or the divergenceuniversity.com. I can also find these links below the video in the pinned comment in the comment section. And of course, if you have any questions, feel free to ask. So let's start with the Forex Triple B. I cannot review all the trades, but I do want to review few. Some of them also you would see we were talking about in our Telegram group, Triple B dedicated, where we are here. So you will see some interesting instrument there, and that's what I want to review. Pound yen. So for pound yen, the idea that I was following here was to go inside the area between the daily and the weekly pivots, and not just the pivots are the ones I'm interested in, but also the lows, okay, the previous swing lows. So I want the price to get there and give me the alert. Why how can I predict that? So the idea here is not to try to predict will the market do that or not. My goal here is very simple. If the price reaches the trading zone I am interested in, then I will be looking for Triple B to give me alerts. Okay, once again, if the price reaches the zones I am interested in, how do I define my zone? The idea here is pretty straightforward. First of all, what do I need? Trending conditions. This is a trend following system. Okay, so trending structure, it's when I have higher highs, higher lows. You can clearly see on the chart, we do have sequence of highs and lows to the upside. Then we wanted to go back to pivot zone. Okay, pivot is anything that combines, for me, the daily and the weekly of the current or the previous periods. In that case, we have the daily pivot and the weekly zone, so that becomes a fantastic area. Together with the lows, it creates a beautiful zone. Okay, and once we are there, this is exactly why once this happened, you see that drop, for me, I know I start to look for trades. Now again, I don't predict like we are in, I'm gonna buy. No, for me, that's where I start to look for trades. So at that moment, as soon as we reached, sorry, what do I do? As soon as we reached the trading area I'm interested in, I'm waiting for the alerts. Here we got the alert. This was the order, break of the previous fractal. Okay. Of course, as we can see, the reason we didn't enter here is because afterwards the conditions improved. We started to get the rally. Another time we retested the Bollinger Band here, as you can see. So now we want to break the fractal of the previous high, the last high, before the Bollinger Band was tested and respected. And this is actually good for me because look what happens now. We break above this high and look at the pivot. Now on this daily section, it's better. So we break above the pivot, above the high with ongoing trending structure. Okay, pretty easy decision. In that case, also delivered. Another trade we've been following in our group was the Kiwi CAD. Same story. I want to drop in the daily and the weekly, in that case daily, okay, previous or current section. So we have a current pivot point and the previous day resistance area that becomes the trading zone. Also low, swing low, and the resistance of the previous trend. So which becomes now a support. So I know again, if I reach inside, for me, it's a good. Is this a trade? Yep, it's this. So here we are. We reached this area, almost entered inside the box, right? We retested the low and the resistance as we discussed, almost reached the exactly pivot area, but the market pulled back quicker. So what I analyze here, we are in trending structure, no doubts. We got the corrective movement, no doubts. We are holding the low, we are holding a support, we are holding the pivot. The only problem in that case is the distance. You see that? Because now with this breakout, it enlarges the stop loss, right? Like in pound yen example, we got the drop to the Bollinger first, and then like we improved the entry. In that case, we didn't have it. So we got the entry and it did not rally much and basically failed. So that, what does it mean? Does it mean it's a bad trade? Absolutely no, because these are exactly the setups I follow, and that these are exactly the setups which deliver about 70, 75, up to 80%, of course, depends on the period, percent of success rate. And why do I say that? Because it is very important you understand there are no guarantees, warranties, or anything like that, that you will make 100% accuracy success rate. It doesn't exist with absolutely nothing in trading, definitely not technical things. It doesn't exist. So stop looking for these holy grails, and instead of trying to find the best accuracy or whatsoever, stick to logical, proven, technical methods based on very simple logic of trends, of levels, of swings, of zones, and get your alerts there, get your opportunities there. Because even with 60% success rate, with one-to-one risk reward, you would be extremely profitable trader. So don't look for 90% or anything like that. It's illusion and basically a lie. Okay, stick with the basics of a technical analysis, proven methods, proven techniques, and Triple B is one of the systems that is based on proven methods. And aim with one-to-one risk reward, stable, at least one-to-one, right? With 60%, 70% success rate. That's it. That's it. Mark my words. That's once you understand these little concepts, these little differences, you start to understand what trading really is about. So these are the two trades from the group. We also were following here Aussie Kiwi, and we got a couple of them. Okay, a bit later because I was looking to trade it here on this pullback. However, you can see the Bollinger Band was not in play. Bollinger Band appeared only later. Okay, so the idea here is again absolutely the same. I want to wait for the trending structure. I want to make sure we get a trend. I want to get pullback back to pivot zone, pivots in play, and previous day pivots. So this becomes my zone, okay, and the lows. That's it. So we got the pullback to the zone. Bollinger Band bounced right here. So with the breakout, and it's pretty, as you can see, the spread here is right after midnight. And the spread here is activated. So that's it. Again, easy decision with the trend, with the pivots. And so it was on the next round. So this was the first round we attacked. Then again, the trend continues, pull back to where? To my desired pivot area. Okay, lows retested, low and low, classical zone. We have also this resistance from before. So this becomes an active area. And from here, I don't know to predict when it's going to make the call, right? But by the time it bounced from this Bollinger, that was the fractal to break, never broken. By the time it bounced from this Bollinger, this was the fractal, never broken. By the time this bounced, this was the fractal, never broken. And by the time this bounced here, this is the fractal. We got the breakout. And that's one of these beautiful things with the Triple B. It goes by official fractals, official highs and lows, and by activating the breakout in a trending direction, you get yourself the chance to be right. And in that case, we were riding a trend without any signs against us on the higher time frame. That's pretty much it. So that's the Triple B review. Once again, if you think this strategy, the system, the algorithm behind the system can be helpful in your trading, you are welcome to get your copy of the Forex Triple B, which, by the way, you get both Forex Triple B Pro and the previous version, Forex Triple B 2, and directly from the website, forextripleb.com, or below the video in the description, or in the pinned comment. Of course, if you have any questions, feel free to ask. The next one is the SRS. And here I want to talk about the trading concepts of step trading and late entry. Okay, so also for the SRS, we were following, as you can see, we always do that. Let's go to the previous week. Here, a lot of ideas that I share with you. Okay, some of them were in the group, some not. Here is one pair that we were following in the group, which I want to explain. Step trading, what it is and how. One of the ways to join the SRS is this. Trending structures, this is the most popular, right? ABCD breakout. What does it mean? I define a trend where I have sequence of highs and lows in the same direction, correction of two waves, A, B, C, D. And once it breaks, I join the trend. Of course, with filtering the SRS candles and the SRS momentum and sentiment on the higher time frames. But in some cases, what happens is we got a pullback and then we get a breakout. It's called a step trading. So we got like steps. Imagine how steps go like this, right? You climb the steps in your house. So when that happens, we got a pullback, and with the breakout, there is no ABCD, as you can see here, right? So once that happens, basically it's like 1, 2, 3, and 4. 4 is the breakout. Why is that good? Because if the trend is ongoing, there is no problem to join. Sorry, different. There is no problem to join the trend with a step trading, as long as there are no signs again. So what happened here? We are in trending structure, or even if we classify that as zigzag, 2 up, 2 down. What happens afterwards? Look at this. Okay, we break this high, the high of this ABCD. We climb here and make trending structures. You see that? Okay, 3 higher highs, higher lows. We break above this high, and this is basically, this becomes a bigger step trading. So pam, pam, pam. Of course, ideally, if we would get ABCD here and breakout, but not always it happens. And as you can see, with the trending structures in play, with the trend in play, highs and lows organized in the direction. Of course, I need to check the sentiment. It's super bullish. Moment is super bullish, and of course, the higher time frame SRS candles are bullish. This is one absolutely classical example to explain when. Of course, it's less common, less popular than the ABCD, but sometimes you will face it, and it's important to me to explain you how it looks like. Okay, this trade was pretty good and delivered both targets, by the way. Next one on the list is going to be the Aussie CAD, which I want to explain the late entry behind it. So, as you can see, we entered here, no step trading, nothing, but the ABCD was here. We were not around. So this was the ideal entry. Okay, with this entry, that would be the stop. And now look what happens. So we got the price going a bit up and then down again. Okay, and by the return of a bullish candle, so the SRS now 4 hour, 1 hour, and 15 minutes again bullish. Look what happens. You did not, if this one would break, the first take profit would be here. You did not reach the first target. You pulled back to the same original price, but nothing changed in the market. Do we have lower highs, lower lows? No. Do we have any signs against us? No. The trend flip? Again, no. Anything that shows us that it's over? No. And this is why once we are bullish again, back to bullish, this was the ideal ABCD. Okay, right here in a trending structure. So we have highs in the uptrend, ABCD correction, holding a supportive zone, breaking. It would be classical entry here, but we missed. We are human being, and so are you. And we can't be always around. We can't get all the signals. It's impossible. But sometimes you would find yourself in this situation, and then you would ask, should we enter? Should I enter? Yes or no? So the answer that I want to bring here in this video is exactly that. Can you enter with late signal? The answer is yes, as long as the trend did not change and your original target of the original signal would not be reached. Nothing against you, nothing changed in the trend. The answer is yes. Because think about it this way. What would happen if you would enter in this place? Would you cut the trade right now? No, you would keep, let it didn't work. So what is different than I just enter? Nothing. Okay. So it's very important thing to explain here. And that's what I wanted to talk about. Now, I promised also to explain what is a bad trade. I think it was here. Yeah. So now here, even though this trade I lost, I think. Yeah. And this is a good example. Okay. Of course, it didn't lose just because of that, but very important to pay attention to what is aggressive trading. Trending structure, again, when highs and lows are organized in the same direction. In our case, pretty obvious, we are bullish. But now look what starts to happen. Look how many spikes, 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 spikes. You see that? A lot of spikes. And even the breakout here happened with a spike. So let's think about it. What does that tell you if there are so many spikes? Are the buyers really in control? No, because if buyers are trying to push, but they resist and they are rejected instantly by the sellers, there is a spike. Buyers try to push, sellers sell again, pushing the prices lower, spike left. That's what we face. When there are too many spikes, there is no control by buyers. And this is a suspicious sign. We noticed that. We still decided to go because the trend was absolutely back in our analysis, absolutely clear. And it's clearly, it wasn't so clear. So this trade eventually lost for us. And I want to explain what is an aggressive setup. And that was an aggressive setup. We decided still to go with that. We paid for that. Looking backwards, it's a mistake. However, we still decided, compared to all the reasons, we take it. And as I always say, you don't pay attention to the little details. You pay by money, and so happened to us. This trade was lost, and I want to explain why it's aggressive. Okay. Next one is the Divergence University. And here, I'm not going to go over all of them. It was pretty quiet week because it was a lot of trend last week. So we had only 4 trades, I think. Yep, 4 trades with the Divergence University, 2 losses, 2 profits. The risk reward was still good for us. But one trade I want to explain, which also the pound franc, it was shared with you in the blog. Okay, you can go to the blog, guys, and you can always find here the ideas, analysis, and everything that my team shares. You can check it here directly, VladimirRibakov.com. So this was the trade shared by Arvind, and right here, as you can see. So I want to explain what did we have here. Why would we sell it? Okay, so the logic here, it's pretty straightforward. It is a completed for us, right? It is a completed trending structure for us by 3 waves reaching to a resistance. Classical resistance. Look at it. Okay, look at that. Here and here and here. Okay, it was classical support, flipped, became a resistance, retested. Moving average divergence on the MACD. This peak starts to turn. Histogram divergence, histogram start to turn, and mainly look at this engulfing. That's one of the classical cases when in a candle pattern, you would get the MACD ticking and the histogram ticking. And on the highs, you would see false breakout. That's it. As always, we are heading towards, usually, right? We are trying to get towards the next important swing. So we have a low here, a low here. It's a good risk reward, this place. It gives us about 1 to 2. So it was easy decision. And in that case, it was also right decision. I didn't pay it. So I want to explain you here, guys, the combination of engulfing that creates a false breakout, moving average divergence, and the histogram divergence as well. So that's it. This is the weekly systems trading review, the SRS Triple B Divergence University. Thanks a lot for your time watching this video. I hope this video opens your eyes to some important details to pay attention to when you trade with the systems. Again, as I said before, if you are interested in getting your access to any of the trading systems and the trading strategies, then you can find the links in the pinned message in the comment section. If you have any questions, please don't hesitate to ask. And I wish you a wonderful trading week. Again, thanks for your time watching and good trading. See you soon with more. Bye for now.